Hello everyone, and welcome to Warren Buffett School. In today's very first video, we're diving deep into the timeless principles that helped one man go from a small-town boy in Omaha to one of the richest, wisest, and most respected investors in American history. But this video is not just about Warren Buffett. It's about what you can learn from his mindset, whether you're 18, 30, 50, or even 70. So sit back, relax, and get ready for a life-changing financial lesson. 1. The wealth mindset that most Americans never learn. In the United States, people grow up learning how to make money, but almost nobody learns how to keep money, grow money, or think about money the right way. Warren Buffett says, "The best investment you can make is in yourself." But what does that mean? It means your habits, your decisions, your thinking, your ability to delay gratification. These matter more than your salary. Two people can earn the same amount, but one ends up wealthy and another ends up broke. The difference is mindset, not income. 2. Understanding the power of time. Buffett began investing at age 11. By the time he turned 76, 99% of his net worth came after his 50th birthday. That's the power of compounding. If you invest $500 a month at 8% annual returns, in 10 years $91,000. In 20 years $275,000. In 30 years $680,000. In 40 years $1.5 million. Time multiplies your money in a way income never can. Most Americans want fast money. Crypto, day trading, betting, flipping. Buffett wants slow, predictable, safe money. And slow money usually wins. Free, cutting noise, following logic. American news cycles are loud. Recession coming. Markets crashing. Buy this stock. Sell everything. Buffett ignores 99% of this noise. He says, if you cannot control your emotions, you cannot control your money. You must learn to stay calm during market crashes. Stay disciplined during bull runs. Stay focused long-term. Ignore hype. Ignore fear. Make decisions based on math, not media. This one skill alone separates investors from speculators. 4. Live below your means, the American anti-trend. Buffett lives in a modest house in Omaha. He drives a simple car. He eats cheap breakfast from McDonald's. Meanwhile, millions of Americans buy expensive cars, luxury brands, unnecessary subscriptions, high-interest credit card debt. Wealthy people buy assets. Others buy liabilities. Buffett said, "Do not save what is left after spending, spend what is left after saving." This one rule can transform your financial life. 5. The value of saying no. Most people are broke because they say yes too easily. Yes to parties. Yes to subscriptions. Yes to expensive dinners. Yes to buying the new iPhone. Warren Buffett says the key to success is learning to say no. You must say no to quick money, high-risk investments, overspending, overcomplicating your life. Wealth is not built by saying yes. It's built by saying no. Part 1 Summary. Before you build wealth, you must build a wealth mindset. Think long-term. Avoid noise. Live below your means. Invest early. Make logic-based decisions. Say no to unnecessary spending. White Medium Star Part 2, The Investment Principles Buffett Swears By. Almost equals 1,500 words. Welcome back to Warren Buffett School. Now that we've understood the mindset, let's move into the strategy, the actual way Warren Buffett invests and builds long-term wealth. These principles have worked for decades and continue to work in 2025 and beyond. 1. Invest in what you understand. Buffett never invests in trends, new hype, complicated technology he doesn't understand. You don't need to be a genius. You just need clarity. Before buying any stock, ask yourself, if the market closed for 10 years, would I still be happy owning this? If the answer is no, don't buy it. 2. The power of strong businesses. Buffett invests in companies with strong brand, consistent profits, low debt, long history of success, clear competitive advantage, moat. Examples of companies with wide moats: Coca-Cola, Visa, Apple, Procter & Gamble, Costco. These are businesses that survive recessions, inflation, political changes, everything. 3. Focus on cash flow, not stock price. Most Americans buy stocks based on price going up, price going down, news, hype, fear. Warren Buffett ignores the stock price completely. He looks at earnings, cash flow, profitability, management quality, business model. The stock price eventually follows the value of the business, not the noise. 4. The rule of buy when others are fearful. Buffett loves market crashes. When people panic, they sell good companies. They sell at loss. Prices fall below real value. That's when Buffett buys. When markets are greedy and overvalued, he waits patiently. 5. Long-term holding, the secret weapon. Buffett's average holding period: forever. He says, the stock market transfers money from the impatient to the patient. This is why he wins. He lets companies grow. He lets compounding work. He avoids unnecessary taxes. He avoids trading fees. He avoids emotional mistakes. Pick a good business and let time do the magic. 6. Avoid high-interest debt, especially in America. Buffett never keeps credit card debt. He says America's biggest wealth killer is high interest. If you owe $10,000 on a card with 20% interest, you're losing more money than most investments can earn. Step 1 to wealth: pay off debt. Step 2, save. Step 3, invest. 1. Build a personal financial system. A simple 3-step money system. Pay off high-interest debt. Credit cards bad. Lines of credit bad. Anything above 8% interest priority. Build an emergency fund. 3 to 6 months of expenses. Keep it in a high-yield savings account. Automate investments. Every month invest a fixed amount. Do it automatically so emotions don't interfere. 2. The Buffett-style investment portfolio for beginners. You don't need 50 stocks. You don't need crypto. You don't need complicated strategies. A simple USA-friendly portfolio. 70% S&P 500 index fund. 20% Berkshire Hathaway. 10% bonds or treasury bills. Why this works? S&P 500 grows with America. Berkshire is Buffett managed. Bonds protect you during recessions. Risk stays low. Returns stay consistent. 3. Your first $10,000 investment plan. Most Americans struggle to invest their first $10,000. But here's a simple roadmap. Month 1 to 6. Save $1,500 each month. Cut subscriptions, cancel upgrades, skip luxury spending. Month 7. Buy your first S&P 500 index fund. Keep buying monthly. Month 8 to 12. Add Berkshire Hathaway Class B shares. Start building your portfolio. Year 2. Increase contributions. Focus on long-term holdings. By age 40, 50, 60 this becomes a powerful wealth engine. 4. Career and income growth, the Buffett approach. Buffett says, investing in yourself pays the best dividends. Increase income by learning new high-income skills, building strong communication skills, networking intelligently, staying disciplined in your job or business, avoiding job hopping without strategy. Career growth doubles your long-term wealth potential. 5. Avoid the 5 financial traps in America. These traps keep Americans broke. Living paycheck to paycheck. Overspending on credit. Buying cars they can't afford. Trying to get rich quick. Ignoring investing until it's too late. Avoid these and you're already ahead of 80% of people. 6. Build a wealth routine. Daily, learn something new about money. Weekly, track spending. Monthly, invest consistently. Yearly, review long-term goals. Small habits, big results. White medium star final message, for ending the video. Thank you for watching the very first video from Warren Buffett School. If you're serious about building wealth, this channel will become your home for wisdom, clarity, and long-term financial success. Make sure to subscribe, because the next video will go even deeper into strategies Buffett used to become one of the wealthiest men in America, and how you can apply them to your own life.